the cost of waiting on the sidelines before you buy a house. It's kind of what we're going to talk about real quick. If you're in a position to buy a house right now, if you're trying to time the market by waiting for rates to come down a little bit, or maybe even home prices to come down a little bit, you're in the same boat with a lot of other folks. And I've got 4 great reasons why this strategy, while it kind of makes sense, is counterintuitive. It's actually going to cost you more long term than just compared to buying a home right now, even with a rate that's slightly higher than what you want it to be. Number one reason is rising home prices. Fannie, Freddie, National Association of Realtors, all the major housing entities across the nation have all predicted that home prices on a national level are going to range somewhere between 5 and 15% increase over the next 12 months. Definitely here in the DMV, we're going to see some appreciation. So that, for example, that a $500,000 home you want to buy today, in 12 months, it's $525,000. Second reason is more competition. You guys are not the only ones waiting on the sidelines. So when rates do see a significant drop from the high 6s, low 7s where we are now, into more favorable rates, instead of having 1 or 2 offers on every property, we're more likely to see 5 or 7 or even more. Harder to win that situation, which means not only 5% more, we're going to have to escalate over list price. So if we escalate over list price, you're looking at 2 to 3% over list. So now you're looking at 7 to 8% higher than where you are now. Third reason is lost equity. Every month that you wait to buy, you're renting. You're not building equity in that house. Instead, you're obviously paying rent, and that's not going to contribute to your long-term financial accumulation. In this scenario that I was talking about, 8% in a sales price is $40,000. Quick math there. $40,000 you're paying more, and if you're paying $2,500 a month in rent, that's another $30,000. So over $70,000 in potential lost family wealth accumulation to save $150, $200 a month for rates. So buy the house now, refinance into that lower rate that you're looking for. And the last benefit is a tax benefit. When you own a home, you can often qualify for a lot more tax deductions that when you rent, you don't have, such as the mortgage interest, property tax deductions, things like that, anything to do with the home. The bottom line is really twofold. You'll never have low rates and low home price at the same time. Pick your poison there. And rent or buy, you're paying a mortgage either way. The difference is, are you paying a mortgage for your family's future or for someone else's? That's the question you have to answer. Call me to see what we can do to help you today. Scott Davis, take care, guys. Have a fantastic weekend.